sort of, and we bounce about 10%. I mean, how much more are we going to go up before we go down potentially? I'm not sure. My guess, I mean, real quick, I don't want to talk too much about this because we did last episode, but maybe see up to like 400. That's my bet, 400 to 410, depending on what level you want to look at. Then I'll probably see a pretty big pullback, maybe. But yeah, I don't want to do too much negative news because I'm very happy today. Intel is up like 10%. I'm getting smoked. So it's nice to see some good earnings and some, I guess, people getting short squeezed out and stuff like that. But I did more buying today. They had a pretty good quarter compared to what analysts were expecting. So that's nice to hear. My average price is still like $43, so I'm still down a lot. Down like 30-something%. I gotta move like 50% to the upside, but the yield right now is like 5% above that. And I'm hesitant on saying this, but they're probably gonna increase the dividend very slightly. However, probably like 3 to 5%. However, I almost don't want them to, but I understand they're probably gonna anyway, even if it's like a 2% or something like that. They're probably gonna do it, and this is gonna be the fourth quarter that they're paying the same dividend, so next quarter they will probably announce that increase. What else do I want to say about this? Yeah, I mean, I've been bought down here in like the 25 areas and stuff, 26, but this big pop today, I'm getting nervous that if it's not gonna be, I think we've maybe hit the bottom. I think 25 to 30 is gonna be this range. We might slop around for a little bit. So I do hope so, because in that case, I'll probably be picking up more and be more, I guess, confident increasing the position if I want to. That, we're not going to continually go forward. We're not going to continually go down. Because I've been buying this whole down move, and yeah, it's nice to see cheaper prices, but also like, it's like, where's the bottom? Like, there's been no real, like, okay, we hit the bottom, maybe even like for $37 around here. This was like a bottom for like a month, and then it continued going down, so it's just hard owning something that keeps going down, but it's nice to buy it cheaper. Just wish I was a little bit more patient. And this still has the potential to go even further down. I'm not saying it won't, but I'm just saying it's getting very appetizing. Also, these like analysts and stuff are still downgrading the like some analysts, like Morgan Stanley, Intel's Q3 earnings were better than feared. I mean, yeah, I think they're pricing this. They want to push this stock down. So even Morgan Stanley maintains underweight, lowers price target to 29. I think they're all lowering these price targets because they, at some point, it doesn't matter if these hedge funds see value in these stocks. The farther they go down, it doesn't matter if the stock is, like, let's say Intel, like, they think it's going to go out of business or whatever. At some point the risk reward becomes worth it, and I think they want to keep hammering this price down now in this zone to at least start picking up and building positions. Like Roth Capital lowers it 230 from 40. We got I already clicked on that one. Another one, Truist Securities, whatever, 29 from 40. We got another one, 24, or Goldman Sachs adjust target to 24 from 23, so they actually increased it $1, their rating. However, they're maintaining their sell rating. I don't know. You tell me that the stock gets like cut in half, basically, more than that maybe. And they did Mobileye just IPO too. Where is that? They IPO'd a few days ago. I didn't actually look up how much they were making from that, but anyway. What was I gonna say? The stock is cheap and they beat expectations by a lot. At some point, this stock becomes valuable to a lot of people with a lot of money, and I think it's somewhere in this range. I think, again, I said that up here, but I also, like, the cheaper this goes, the higher probability it's probably going to get bought up by a lot of people. So anyway, I'm still buying. I don't know where this is going, but I like the stock, these prices even more. I liked it up here, but now I'm loving it. Just gotta be careful though, I'm not over leveraging, over risking myself. Google is now at like $90, almost 95 though. I think I'm gonna wait till like 90. I think we see some more downside. Meta got like 25% down. What is it? The other day off earnings. I mean, this thing is down 75% from the highs, but yeah, just getting smoked. Very, very fascinating. I mean, kind of everything Snapchat. I mean, this. It's not a good company. Amazon, I think, reported today. Got smoked off earnings, down 10% right now. I don't know. I don't think Google is that expensive. However, I still think it could probably go to the downside. $90, I'll start picking it up. But the thing with Google and like these companies is they don't pay a dividend. So I'm more hesitant to buy it because I need that appreciation, that anticipated appreciation, like Intel. That 5%, 4% dividend, however you want to think about it, or where you position yourself, that's going to be pretty stable, in my opinion. Again, things can happen, but no, I assess the risk reward. I think it's pretty good. However, like Google, the only thing that can happen is where I gain, I guess, monetary value is from the appreciation. So yeah, just one of those things. Apple though, Apple's up 7% today. Massive jump for this company. Still kind of slopping around, but honestly not down that much from the highs. I'm so laggy. There's so much activity happening on Apple. I mean, I still think it's super expensive, but it is what it is. It's a good company, no doubt. It's just expensive. Oh yeah, Verizon today doing good. So my portfolio like shot up today because we got Intel, Verizon, even Exxon. I mean, they increased the dividend by to 91 cents from 88. I predicted 90 cents, so 1 cent increase, or 1 penny increase from what I thought. They did really well. I didn't read the report or anything. Obviously, I didn't really read Intel's report either. I read the news release, but not the whole 10Q or 10K. I think 10Q obviously for quarter. But yeah, this is still like one of the best things I've ever bought. They're doing well, so we'll see what happens. Yeah, I think so. For right now, I'm up as of right now 174%, not including dividends. Including dividends, it's probably like 190. No, as I bought it here. How long has this been? 2 years. I'm up, I guess, 200%. About 195, I guess is. Yeah, about 195. Cool. Definitely not tooting my own horn because I'm down a lot more in Intel. I'm down a lot in Verizon. I'm down a lot in all the gold and silver miners. So definitely not trying to. What's the word? I know the analogy, but I'm not gonna say it. I'm debating actually selling some uranium. I still consider it long term. I did sell the quadruple U position a while ago. I think I told you guys, but I mean, this is looking bad. So this is looking different, right? We keep getting these higher lows. We get this candle here looking weak, shoots down, shoots up. Don't get that higher high. I meant not higher low. We come down to here. We spill down. They bought or acquired something. That's why it got like suspicious. But it encountered these trend lines, so it bounced off of like $20, $21. Now we're gonna end the month with like this type of candle. Probably actually today's the last. This is how it's probably gonna end. We have a few hours left in the trading session. October 28th, 29th, or I guess Monday technically is Halloween. Right? Yeah. So 1 day left. I don't anticipate this to shoot up and look super green. We gotta move 8% and want that as possible, but we don't make that higher high. We get this massive candle down, 20% down in 1 week. We then shoot up, which is okay, but then I don't know. I don't like how it feels. It feels weird, and I kind of want to lock in the profits. I wish I locked in the profits, obviously, like all the way up here. But I'm up like 34% right now. Just checking. I would probably sell half the position. We're still in at like 17 down here, so we're still doing good. It's just there's just so many good things I want to buy right now, and I think the market's still. I think, yeah, I guess it's going in general. I think the market's gonna go up to here, and then I think we're gonna go back down. I don't think we're gonna shoot right back up. I really hope not, because that's just not good. Hopefully, we come here, we come down, maybe even make a higher low or something, then start building this pattern. But would love for the market still to fall down to here. Again, I don't know what's gonna happen, but right now there's things that I want to buy that are cheap, and I don't mind locking in some profit now. Even though I could. It stinks because it's down 20% from where I could have sold, but I was getting good vibes up here. We had strong momentum into it, then even retested, but like, yeah, just the price action's feeling sus, so I ended up buying some Hanes brands. The dividend's like 8%, and this thing is like, they have a lot of debt, don't get me wrong, a lot of debt, which I dislike. Somewhat not good revenue growth, but they're generating a lot of free cash flow. Their PE and their free market cap, their free cash flow ratio is insanely cheap. They're also, the dividend's 8%. They've been paying this thing for a long time. They haven't been increasing it, but this to me is like an 8% just stock you hold, because it's at this price. Like, this is the monthly chart. Like, we're back in like 2012 levels. Can get cheaper. They could cut the dividend, although they have not cut the dividend ever yet. And they actually, but it's also been a good market the last like 10, 15 years. So I had it a little bit. I thought it was worth it. Logitech had great earnings, or I didn't actually read it, but the market's reaction was great. Kind of stinks. I wish I bought more down here, but I thought it was going to go to like the 40. We'll still see though. We're getting some selling pressure. Actually, we are, but we're actually holding this whole week at $50. My average price is still $50 roughly, so we'll see what happens. I ended up picking up Ruger, RGR. So their dividend fluctuates, but it's because they pay out 40% of their net income in dividends, which is pretty spicy. But right now the yield is like 4 to 5%, depending how you look at it. Their balance sheet is beautiful. It's insane. There's like zero debt. They're buying back shares too, consistently paying a healthy dividend per quarter and generating the money. Obviously, it's kind of similar to Smith & Wesson, but they have a more, it's that company type of company. But I wanted to add some. I added this, I think, at like 52. Yeah, I guess like around here. At $53 about. I'm hoping they do bad on earnings and the thing drops like down to here. So there's like this trend line here. I hope it doesn't run up, but I hope it get a nice, like I hope there's a negative news buy down here. So we'll see what happens. Definitely don't have the position size I want, but yeah. Smith & Wesson not getting smoked. I did add a little bit. It seems to be holding at $10, but I'm down like 50%. So just how it is. Yeah, all the gold miners and stuff getting booped. Oh, realty, this thing finally dropped to my price target about $55, and then it shot back up, but I think there's just better things to buy right now. I think if we see 50, I think it's very, very tempting. Same thing, I think Stag, we talked about it. This actually hit the trend line, which is awesome. We actually came all the way down over. People were like buying it up here. Even my friend was like, oh, we gotta buy it. I said, no, we gotta wait. It comes down. I think he picked it up at 30 though, but this would have been my pickup zone. There's just, I think, better things to buy. Sure, it jumped up and everything, so there's that too. They did increase their dividend to 57 cents a quarter. Is that right? Why can I see that? Dividend 1.22, yeah, so actually, what is that? They do 53 cents divided by, it's like 32 now. That is not, what did I just do? 1.22 times 12. How are they getting this? What is that? I don't know. I'm gonna do my numbers. That divided by 32. It's like 4.5% yield. It was like 5% down here, but again, I just think there's some better things to buy. Let's get rid of that. No, we'll keep that. This company, yeah, And so the main thing is, yeah, everything is pretty much moving up, except for like tech and stuff, but that stuff was already super expensive. We can still see a lot of downside, like talking like 20 more percent. It's always, I don't want to be like that guy, negative Nancy, and make everyone feel sad, but it's important to know, I guess. And I just want to make sure like people don't like listen to these videos or listen to other videos and they're like, oh, market's rebounding, we gotta get FOMO'd in, buy, and then all of a sudden it's like, oh, everything drops, and you gotta understand the risk. I understand that things in a mine could still fall a lot, and it's okay, it's whatever. That's why I'm buying. I'm basing my valuation on, okay, this to me is good. Doesn't matter if the market goes up or down right now, to me it's fine. Understand that risk. I think we'll move up to 410 next week, probably. Maybe 400. The thing is, there's nothing going on at 400 really. Not a lot of. If it's 410, the significant level, I guess. So we'll move up maybe 6% more. No matter what happens, if we shoot right past this, I'm gonna say that's bad. Like that's just overhype, because we have this pretty strong grind line here. So I think we hit that. We probably come down and chop around here. I think ultimately we want to this zone right. Actually, is that it? Actually, we were to do this like. I mean, if we put a standard deviation zone or something, we want to be like here. About, maybe not, maybe a little higher. I'm just trying to find like a really rough mean line. Like, okay, let's say we touched it here. We want to be slopping around like that zone, so like in here, roughly. We don't want to start going all the way out here and up to here. You want to be steady, and market steady, cool. We buy the stocks that are cheaper, relatively, based on what we deem to be valuable. But if the market falls even more, I mean, that's great. Let's just check this out really quick. I like looking at this. It's been a little while. We're going to put on let's put in the 3 standard deviation zone first. How are we looking? So we're definitely chilling. We're still very expensive, I guess, relative to this metric, but that's also 3 standard deviations. Let's head on over to 2. And we're kind of guessing that actually is interesting. I wonder if that's a coincidence. Might be a little coincidental, but 2 standard deviations is a little high. This is, I can be 95% confident. Is that it? Yeah, 95% confident that the stock market's value should be, let's say, 0 to here. And we're out of there. So at 5% confident, it may seem like not a lot. Or it might seem like a lot, but it's not. I would bet the market's in here. I still think we go down lower. Or we continue to chop around here for a very long time. I don't think we go much higher. Yeah, we're still expensive. It's tough. It's tough. And again, this is price action, but it has its importance or significance because it has to do with the price over a very long period of time and slapping a standard deviation, or yeah, I guess standard deviation, but a probability distribution kind of on that. I don't know if I call it a distribution, but slapping a probability metric. Yeah. But I mean, if the Fed keeps printing money and stuff, and it's tough. It's a tough call. That's why you gotta, I guess, continue to buy stuff and buy good stuff. Just take these off. Is there anything else you want to take a look at? How's Disney doing? Where are you, Disney? Disney. Chopping around. I don't know. Nothing's enticing me to get back into this. Real quick, as a lover of Star Wars, let's just say, just me personally, and even like Disney movies and stuff, the shows they've been making, I'm more specifically talking about Star Wars, the amount of money Disney has to throw at these stories and problems, how are they so bad at making like a plot and characters and their shows, target, but I think owning too many. Oh, that's what I wanted to do. I wanted to take my whole portfolio and convert every stock I have to a, I guess, per share metric. So like debt per share, free cash flow per share, like revenue per share, and then multiply that by the amount of shares I have, and then make a stock. I guess this is kind of like what an ETF is, but make a stock or a company, or even like Berkshire Hathaway, of what my portfolio's value is. So like, I want to see how much debt per share my entire portfolio has, and apply metrics to my portfolio, like how is the free cash flow per share of my portfolio in line with what I want it to be. I think that would be pretty good to do, just to make sure that I don't have too much of my money into let's say two indebted companies, or I think my free cash flow per share as my entire portfolio is like this, but it's actually lower. So I need to start buying things that are, I guess, cheaper. Yeah, even cheaper, let's say, than more expensive stuff. Just stuff like that I think would be kind of good. Or even like margins. Like, what if my whole portfolio margins are